Hola mi gente, on today's video, we're going to do a deep dive analysis on Uber stock, ticker symbol UBER, and this is for long-term investing. So stay tuned if you're considering this company as an investment. Welcome back to the channel. This is Sean from We Are Investing, a channel that is dedicated in investing and personal finance. I'm not going to waste any of your time. We're just going to get right into the video. And the first topic for this video, for this stock, is big picture, total addressable market, and potential growth for Uber. Now, these are things that are my personal opinion. I'm not your financial advisor. And until we get into the charts and the financial segment of this video, these things that I'm going to list now are my personal opinion. Now, in my personal opinion, when you invest in Uber, basically you're investing in a company, part of the company, because the company has evolved and is more dynamic now. Part of the company basically is an investment. If you had the opportunity to invest in all taxi companies combined into one company in multiple countries, in the United States of America, in Canada, in Mexico, in countries in Europe, imagine all those taxi companies combined into one. Well, there's Uber, but you also have the delivery side of things, which makes Uber dynamic. And we're going to dive into all of that and more in this video as well. But I definitely think that the transportation space, to be able to invest in a company as powerful as Uber when it comes to getting people to point A to point B, is definitely interesting to say the least. And that's why I think you should have your eye on Uber moving forward as a long-term investment. But that does not mean that there are not flaws with this company and this stock, which hopefully we can talk about on today's video as well. So basically what I see is that Uber is a dominant player in their space. And you also have the delivery side of things, which I think has a lot of growth potential. It's not just getting you food. It's not just a delivery man for food. We're talking about shipping of pretty much anything out there. They are really expanding the products that they can get to your door. And when you consider Amazon, what is Amazon? Amazon is a logistics company. And what Amazon did so well is they got you free 2-day shipping if you were a Prime member. What Uber is trying to do is they're trying to take that up another notch. Uber's trying to get you a lot of goods and services within a couple of hours. So instead of 2-day shipping, you have same day, same hour, next hour shipping on a lot of goods. And that delivery service could expand and become very profitable for Uber, and that can tap another leg of growth for the company and for the stock. Some other long-term things that you can consider when investing in Uber is the autonomous driving portion, and also their freight business, and potentially air mobility as well. Those are some longer picture things, but you can consider them as well. I just wouldn't make them the main focus of your investment. Next, let's talk about the technicals when it comes to Uber. What's going on with the charts right now? Well, the charts right now are in a point of conflict, and they're actually kind of bearish. The company, the stock, has been rolling over in share price. And right now, we are basically at a double bottom. Now, at a double bottom, things can go either way. This isn't a point where I think we're just going to kind of stay where we're at for some time. Now, remember, we're heading into earnings on the 4th, August 4th. If earnings are good, then the stock should shoot up. If earnings are bad, then the stock should break down and we could head to around $38, $39 a share. So there's still a lot of downside when it comes to Uber. Now, I'm looking at this company as a long-term investor, and I don't want to get into this stock or add more right now leading into the earnings report. So I'm waiting to see what's going to happen on the 4th before I start adding a ton of shares. That's what I'm going to do personally. You could trade this if you want to, but long-term, if the stock goes to around $38, $39, and there's nothing horrific in the earnings report, and it looks to be like the company is still moving in the right direction, then I will add shares at around $38, $39, or whatever the price would be after earnings. Let's say it even goes up a little bit, that's okay. I would add then. I just do not want to be adding leading to the earnings report with this uncertainty and unclarity when it comes to this stock right now. All right, let's dive into the financials. And this is what I think matters the most when it comes to Uber and what I'm going to be looking at when they release their earnings report, because there's some metrics that I want to see. I want to see that this company is moving in the right direction. So a quick backstory when it comes to Uber, and probably the most criticized thing about this stock is that they're not profitable. And when will they become profitable? I think once this company does become profitable, you're going to get a lot of interest, and investors are finally going to start piling into Uber stock. But if they don't become profitable and they continue to lose money, then the share price will continue to fall for Uber. So they don't need to become profitable tomorrow. They just need to show investors that the path of probability is realistic, and they are starting that path now. So we were heading in the right direction until we got hit with the pandemic, and that really hurt the financials of this company. However, unlike Lyft, Uber has a hedge with the Uber's Eats platform and Uber deliveries. But let's take a look at the financials. If you look at revenue for this company, from 2018 to 2019, revenue grew at 25%, which is pretty healthy. That's a decent amount of revenue, and you can even consider maybe that's growth stock territory. But in 2019 to 2020, revenue dropped 14%, and that's because of the pandemic. Now, the mobility adjusted EBITDA, mobility is the ride-sharing business, is the traditional business for Uber. The EBITDA on that portion grew 34% from 2018 to 2019. And you can actually see that they were posting positive EBITDA, meaning that earnings before interest, taxes, depreciation, and amortization was positive on that business in 2018, 2019, and also in 2020. So that business is profitable. But if you take a look at the delivery adjusted EBITDA, you can see that that business is not profitable. It's at $601 million loss in 2018, $1.3 billion loss in 2019, and $873 million loss in 2020. But the thing here is that that business really grew because of the pandemic. They gained pricing power, they gained consumers and customers, and in theory, because they acquired all these customers and they got that business really churning during the pandemic, they should be closer and closer to posting positive EBITDA for the delivery portion of the business. And as you can see, this is reflected in the numbers. From 2019 to 2020, there was a 36% increase in EBITDA for the delivery segment. So if that continues to increase, then eventually you have two businesses that are posting positive EBITDA, the delivery and the mobility. And therefore, after everything's said and done, Uber will be closer and closer to posting positive net income and truly become profitable. Now, Uber is a business that has a lot of moving parts, and it's very dynamic. And it does well in certain situations, and it has businesses that hedge against each other, which makes it kind of hard to analyze. Because with Uber, as we reopen, the mobility portion is going to grow and it's going to do better than the delivery portion, because the delivery portion thrives in an environment where we're in lockdowns. And that's why that portion of the business grew so much because of the pandemic. So as an investor, it can be very hard to analyze Uber because you have so many moving parts. But what I have my eye on for the next earnings report is gross bookings. And I want to take a look at gross bookings for mobility and gross bookings for delivery. Basically, I want to see how much business was lost on the delivery side of things and how much business was gained on the mobility side of things. And when everything is said and done, is it good or bad for Uber? So if you take a look at this picture right here, you can see that the highest gross bookings for Uber on the mobility side of things was $13.5 billion in quarter four of 2019. The highest gross bookings for the delivery side of things was the most recent quarter, quarter one of 2021 at $12.5 billion. So what I'm looking at for the next quarter is I would love to see that mobility increases. And if we also see an increase in delivery, then that's a good sign. If we see a slight decrease in delivery, but a big jump in mobility, that's also a good sign. Net, what are the gross bookings for Uber moving forward? So that's the biggest thing that I have my eye on for the next quarterly earnings for Uber. I want to see how strong mobility is rebounding, and I also want to see if delivery is keeping its ground and is maintaining strong. I don't expect delivery to continue to increase at such great growth rates, but I definitely think that if delivery can stay strong and we see a good rebound in mobility and also take rates are improved and EBITDA is increasing for this company, then I think we're on the right direction and we're trending towards profitability for a company that has a lot of long-term potential, in my personal opinion. Now, I just mentioned take rates. And one thing that I think is very important for Uber is pricing power and how much power they really have. And I think this is being seen with the increase in rates for Uber fares. And this is part of a dynamic with people not wanting to work and they don't have as many drivers out there. And also a lot of people want to go places. They want to start dating again. They're traveling. They're going to different countries. They're going to different states. They don't have their vehicle. They need to call an Uber or a Lyft or whatever. So there's huge demand and there's a lack of drivers. And what does that mean? Uber has to charge more. But I think that this is a sticky business that once they start increasing rates, I don't think they're going to trim them that much because demand is just there and people are willing to pay $14 for a ride when it was $10 before. And that's a 40% increase. And a 40% increase might not seem like a ton to the consumer, but when you start adding that up with all of the fares and trips that they have, that can really make a difference on the gross bookings and the EBITDA portion of the business. So I definitely think that there's a dynamic here moving forward that we see a lot of pricing power for this company. And that pricing power, albeit it's not cool for the consumer, it's really good as an investor because it impacts the bottom line of the company, and that's where you make money. So all in all, there's a lot going on with Uber right now. This is not a company that you should be investing in if you are a beginner because there's just so many moving parts. But big picture, I laid out some of the things that I think is possible for Uber. And I do think that there is a lot of potential for growth here. And I think it's a business that has a dominating platform and is going to be dominating for some time. So this is one of these companies that I think if you're going to be investing in the reopening trade and people getting out and traveling, that Uber is a great way to play it because it's a leader in what they do. And that is why I'm invested in the company. And that is why I'm going to be adding more shares following the quarterly earnings as long as this company looks like it's starting to get back to the path to profitability, which is the most important thing because I don't want to be invested in a company that's never going to be profitable. I would love for Uber to be profitable within the next couple of years. But with all that being said, mi gente, if you like this video, please consider joining us by joining the Patreon. It's going to give you access to a Discord server of over 500 investors where we talk stocks and cryptos every single day. You can do so by joining the Patreon. A link is provided down below. I'll catch you guys on the flip side. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together we are invincible. Dale.